Lorillia coming to you today. As you see the title, Real Estate Loans, Business Credit, and DTI. So, what do I mean by that? So, if you're new to this channel, I know I'm streaming on Facebook and YouTube, but if you're new to me, understand I am not new to the conversation of credit, personal, business, as well as leveraging it for real estate. And that is one of the areas that I specialize in helping seasoned investors or those who want to get started in real estate understand as well as access insecure business credit to invest in real estate. Understand there's a difference. Access and secure, not build real estate. But of course, this video is not about that. I've already discussed those things before about the difference between building real estate and accessing and securing. So I decided to do this video because once again, what is very common in the marketplace when it comes to these topics of business credit, real estate, you have a lot of people who are talking theory. You have a lot of people who pretty much can just binge on a lot of content, create a cute meme, and people take it as gospel. And I'm here to disrupt a lot of what it is you see in the marketplace because no one is really talking from a place of practice. And what do I mean by practice? Someone who is actually assisting individuals with securing credit to leverage to invest in real estate. And that's why I think this topic is definitely needed. So let's unpack it. I'm going to start with one of the common memes that I see in the marketplace and why a lot of times it may not work. Believe it or not, it may not work. And so one of the memes usually goes like, hey, you can leverage or you can use your credit card to be able to invest in real estate. That's a very common meme. It's a very common statement in the marketplace. And so one may say, well, Aurelia, isn't that what you said you do? You help people leverage credit, personal and business credit, or credit in general to invest in real estate. So, what is wrong with that meme? Well, this is why I want to tell you. Let's unpack it. It depends on the type of investment you are securing. And that's why I said a lot of people are not speaking from doing it in real life. They're just kind of hearing sound bites and putting their spin on it, and they really don't know what it looks like in real life. So let me help you with that. If that is a strategy, if that is a move that you're doing where you're going to leverage business credit or personal credit or any type of credit to partner with some type of mortgage or what have you to invest in real estate, you need to know the moving parts of what you're doing. For example, that is why in the title I had DTI. That strategy will not work with FHA. And so you hear a lot of people talk about how you can invest in real estate, 3.5% down, and FHA, and do this. And then you hear people who say, oh, you can get a 203B, 203K loan, which is an FHA product, but it allows you to have the construction component part of it too. Well, once again, you can't do that with credit. And the reason why you can't use either one of those with credit is because those loans are backed by the government. And so today was a day where I had a mastermind call with clients of mine. And so we talked about some of those things in the past, and the conversation came up today. And so once again, talking about what's in the marketplace, let me share this with you because I know a lot of the people out there are just kind of giving you sound bites and they're not really telling you the real deal. You can do the research on your own in terms of FHA. FHA is a government backed mortgage program that is FHA is the same in Virginia as it is in New Jersey, as it is in California, as it is in Vermont. And with that being said, your debt to income ratio matters. And also the amount of debt that you want to carry to get into that loan matters. And so, yes, lenders are going to see if you are using your personal credit. Now can you get creative if you are doing things from your business to be able to pull those funds? Yes. And by all means, you have to know the moving parts, because if you're using personal credit, it's not going to work. They're going to see that your DTI, your debt to income ratio, is going to be out of whack. So you can't leverage credit. They want to know, where did the down payment come from? Where did the 3.5% come from? And so when you hear these sound bites and people aren't giving you a full picture, a lot of times people take it and they run with it, and they don't really know how the moving parts work. So once again, it really depends on what it is that you're doing. Now let's unpack the investor loans. The reason why I put investor loans in there, and it matters, is because what a lot of people do not know, investor loans are backed by different entities, hedge funds, private equity firms, maybe even some small banks. That's very rare. And the reason why I say it's very rare is the type of loan it is. It is a non qualified QM loan, which means that many investor loans allow you to have no bank statements, no tax returns. A lot of large banks aren't really swimming in those waters, but the private equity firms and hedge funds that you don't know who are backing these loans are swimming in those waters, because clearly they are basing it on the asset in hand. And so they look at it, they look at the asset, and they look at the debt service coverage ratio to see, will this asset by itself stand alone to be able to pay for the debt service, which is the mortgage for the particular property. Those type of loans, you can get creative. You can leverage personal credit, you can leverage business credit, because at the end of the day, it matters with the deal. And another thing is, it's not backed by the government. So this is where the gray area comes in at. People feel like that if they are a mortgage originator and they're working with a particular company, that is the way it works all across the board. And it's only like that if you are working with government backed programs, FHA, a VA loan, a USDA loan, a 203K loan. Those are government backed loans, and the guidelines are straight across. But when it's investor type loans where they're backed by private equity and hedge funds, the rules are very gray. And so a person cannot feel like, just because they talk to this lender, the rules are going to be the same if they talk to that lender and if they talk to another lender. The rules are different. And that is what a lot of people do not know. So, my point in all of this, and I know I've said a lot, be careful with little memes that are out there in the marketplace, and you don't know the moving parts. And that is what I'm seeing. A lot of people are hearing little things, seeing things, and they don't know how the full picture comes together. I was recently looking on Instagram. I won't call no names, but influencer in the real estate arena. And apparently, I don't know, the person helps people I guess helps people work with individuals who can get them money. And so the person they was working with got the person the money, but the person was not too happy with the money that they've gotten. Maybe the fees were outrageous or what have you. And I could do a whole separate video on that. And so the person who's a very influential person in the space, won't say man or female or what have you, pretty much said, well, you wanted the money, right? You just didn't say what type of money you wanted. And so, it was very insightful because once again, it gives awareness, which is what I tell people that I work with, clients that I work with, is that, yeah, you can get real hemmed up because people are putting colorful memes and colorful pictures and things that can have a life-changing financial situation to what you are going through. And so you need to know the moving parts when you start saying leveraging credit. Thank you for that, Curtis. Thank you for that. Um, and be very careful of people's talking about leveraging credit and and real estate, and you don't know the moving parts. You see what I'm saying? Hey, Facebook user, not sure who that is, but hey, that I want to do FHA, you know. Um, and I want to do the 3.5% down. If you know in your heart of hearts that works for you, that is going to allow you to be able to get into the investment property that you want, then you don't need to be looking at no leveraging credit because your DTI is going to be out of whack. It's going so if your mortgage person ain't sharing that with you, understand you need to know that. And that is information that you can get right off the internet. Like I said, the government guidelines. FHA ain't no different in New York than it is in New Jersey, than it is in Virginia, California, Vermont, Colorado, don't matter. Government backed. But as you know, Curtis said, what like he said, it's all in the details, the amount, the interest rate, the terms, exactly. When you are dealing with investor loans, and investor loans, you can get a little creative. That's where you can leverage credit or what have you. And that's why people decide to work with someone who can remove the blinders off of them and help them to understand the moving parts. So Curtis says, yeah, most people are hasty to get the deal. They don't know the details. Exactly. Because things are all good. They all good on the Instagram memes, on the Facebook memes or wherever you see it. Oh, it's all good. I told a client today, you know, um, you're looking at these Instagram stories and you seeing people moving and shaking or what have you, but understand that's their chapter 30 and you're in chapter 1. And understand, getting access to the money is easy. Getting access to the money is easy. But if you don't know those moving parts, you don't understand the deals that you're getting into, not only are you liable for the money that you have now gotten access to, you ain't brought in no money for this particular real estate deal that you're trying to do. Curtis says, yes, we have to get away. Yeah, exactly. Exactly. Surface stuff. You're seeing people highlight reels. You're seeing people telling you, giving you a snapshot of something, but not a full picture. And that even includes me. Like I'm doing an online YouTube or Facebook video. I mean, it's only been 14 minutes. There is no way that I can unpack from A to Z all the moving parts in one video. There's no way I can do that. And that's why I want to tell people you need to understand that too, because people are just getting snapshots of things and don't really know the moving parts. And so that's why I always say there's 100 ways to skin a cat. I am not going to say my way is the only way. Like business credit is the only way, but it is a strategy for those who want to be able to leverage credit cards and to acquire real estate. And they don't want a mortgage behind it or what have you. But when you decide that you want to leverage credit along with getting a mortgage, understand you are working in murky waters because it really does depend on the mortgage that you're getting. And so if you are sold on you are a veteran and you want to get a VA loan, 0% down, of course, clearly don't need no credit cards. Don't be looking at no credit cards. If you know that you want FHA or what have you, you don't your DTI matters. Your DTI matters. For example, a guy here in my local market, he's no influencer, what have you, but he's doing deals. He's a real estate agent. He has clients. Sometimes he comes up on Facebook Live and he talked about today how a client of his tried to, get a mortgage for a home that he helped her see. And those were the things that she was coming up against. She was coming up against debt to income ratio and all those other things. And that is the beauty of investor loans. That's a whole nother video that I'm going to talk about separate. But with investor loans, you can get a little creative. But if you're going for a loan that's, like I said, FHA or a 203 K loan, which is a construction type rehab loan for FHA, um, DTI matters. Debt to income ratio matters. Curtis says, right people love to read the last chapter, but not exactly because that ain't where the pretty stuff is. The murky middle is not the part that is part of the highlight reel that people see on Instagram. They're not seeing that part. The same way I've said before, if anyone is familiar with my videos, they know I scream to the I scream out all the time that you're hearing people talking about they're doing this with business credit, all this stuff. I get it. It can be done, but it ain't being done with no paydex, no paydex scores. It ain't being done with no net 30s because we all know, unless I don't know anything about it, when is the last time you can be able to acquire or get access to real estate using an Amazon business card? I don't think that works yet. I'm not saying it won't, but right now you can't. A net 30 account. You see what I'm saying? So I always tell clients of mine, and I'm sharing it here, live. Many of the deals that you see people do, they're not giving you the backstory of how they started. They're telling you their chapter 25, and now they've built up their business credit. And so that's all they're doing. But to sell you, they're going to tell you you need that 30s and all this other stuff. So Curtis says there are builders stuck with half-built houses because of the cost of the lumber. Exactly. That occurred during COVID. I had clients during COVID where they got stuck holding the bag. Some had to, relinquish homes back to hard money lenders because many of them had got private equity or hard money loans, and of course didn't account to sit on something for a month or 2 months or whatever. If when the country was locked down, because we all know the rent is still due. The mortgage is still due. When I say mortgage, meaning the payment to the lender is still due. So the lender don't care that cost of lumber went up. The lender doesn't care that the country's on lockdown. And we're not talking about mortgage moratoriums because those were the larger banks. I'm talking about smaller. When I say smaller pools of money, I'm talking about money that was backed by private equity and hedge funds that a lot of times has to do with the hard money loans that a lot of people get, and any type of construction loans. Those aren't big banks. So many hard money lenders, and I'm not speaking for all, because like I always tell people, they're different. They're not like government backed loans where the guidelines are straight across the board. Private money, those guys and gals can make the rules the way they want to make them. So, to really sum it all up, know all the moving parts. Know all the moving parts. These fancy memes will get you hung up. Curtis says, it's not a perfect equation on paper projections. Exactly. And I'm glad you said that, Curtis, because like I said, having a mastermind call with clients of mine today, that's the thing that we talked about. The numbers are not pretty. No one wants to run the numbers. People want to do what you see on Instagram, the house, the paint. A hot thing right now is the Airbnbs. And so people want to talk about how they're going to design them and all the pretty stuff and all this other stuff. And I asked some of the hard questions, as a bonus, I'll share with you all. I asked a client of mine, so how are you going to get your first your first person to rent your Airbnb? Because you're working on getting the money, and so you got this money that you're looking to leverage. And understand, you get the money in April, the payment is due in May. The lender doesn't care that your Airbnb is not up. The lender don't care that you have not um hey, how you doing, Juvie lover? They don't care that you have not um got your first person to rent your Airbnb. The payment is still due. So going back to what Curtis was saying, what do the numbers look like? Because I tell my clients the money isn't hard. I know there's a lot of charlatans online, and it's sad that they're teaching people, they're giving people a scarcity and a fearful idea about getting access to money. So they're pretty much telling people strategies and tactics that are literally going to land them in jail, you know. And so I say all that to say, I tell my clients the money's not hard to get. And so when you get the money, how are you going to pay for it? How are you going to pay for it? Curtis says there's a marketing budget. You're competing with other. Exactly. It's a lot of stuff, and this is not to deter anyone, but it's just for people to understand that the money is still due. So people think, and that's one of the things with clients of mine. Once they work with me and I show them the money wasn't hard. See, the money is only hard when you're trying to do some type of, strategy that doesn't work. You got bad personal credit, but some way or other, you're going to lock in with business credit and build these net 30s and all these other things and paydex scores and think a windfall of money is going to fall into your lap because you don't want to do the hard work, which is working on the credit. So, and I know I've said a lot right there, but going back to what I said in terms of, investing in these things, um, Juvie Lover Curtis says hello too. There are a lot of moving parts, and so you need to know that. We're going into quarter two. Within a couple of days, we'll be in quarter two. So, what goals have you made for yourself to be able to leverage funding, invest in real estate? What if you did? What are you working on? But as always, always want to be able to come and share some insight, give some real picture, real real life situations that I see on a daily basis, not someone who's regurgitating information and putting up pretty memes. And no, a person you haven't helped no one be able to do what it is that you're talking about. But I will share this. In 2 weeks, I will be doing, if you like some of the things that I talked about today, I will be doing a workshop. If you go to Never Lose a Deal, um, neverloseadealevents.com. I am doing a workshop on April the 9th, I believe it is. I don't have a yeah. And it's a 4 to 5 hour workshop, and we're going to talk about and unpack some of the things that I'm talking about now. What does it look like to be able to leverage credit and put it together with an investment loan if you need to carry a mortgage? What does it look like to be able to outright get access and secure funding to invest in real estate? What does that look like? And so those are some of the things that I'm going to be talking about. It's a virtual workshop, like I said, April 9th, in 2 weeks. And so that's all that I have. I think it's one more. Curtis, I'm glad that you mentioned about Clubhouse. It's interesting. I was going to talk about that and I lost train of thought, but yes, you're right. You have these, the way I look at Clubhouse is that people are speaking from their perspective. And that's why I said with the investor loans is that they're working, like, I'm just going to speak on mortgages or whatever. They're working with, you know, different business types or real estate types, and they feel like, this way is the only way. And I'm just like, nah, it don't work like that, but of course, it sounds real convincing, and so people think that that's the only way, and not knowing that there's 100 ways to skin a cat. For some people, FHA is for you. If you feel like FHA is for you, by all means, do that. But also know, don't be looking at nothing about leveraging credit because you got to work on your DTI. You have to have verifiable income. But then there are investor loans. And the reason why I'm making a distinction is because the person who is self employed, you're not, getting a W-2, and your income is basically can be verified on bank statements or what have you. There's another way for you to acquire real estate. And I feel like that needs to be a separate topic. And it's not a lot of people who talk about that. And those who do talk about it are still talking from a standpoint of conventional mortgages, not from the standpoint of investor based mortgages where they can look at the debt service ratio. Of course, it has to be a multifamily. I'm not talking about a single family, but even some short term rentals can work, if the numbers make sense. But those loans can be based on a self employed person or a person who has a business, who has an LLC corporation or what have you, S Corp, and they can show that their business is bringing in money. But going back to what Curtis said, you got these clubhouse rooms and, people saying, no, my way is the only way. And if it ain't done this way, and it's just like, it can be very exhausting. So I'm glad that you peeped that out too, um, Curtis. So once again, this has been a very interesting conversation. Thank you for joining me. I plan to be a little more consistent, but like I said, I was in the lab working with people, had a call today, and I said, let me jump online. It's been a minute and share some of the insightful things that I am seeing in real life that I know that somebody else can possibly use. So thanks for joining me. Thanks for if you're watching a replay, put replay in the comments. But thank you for joining me, Juvie Lover, Curtis, as always. And I will talk to you in the next video. Don't forget to go to www.neverloseadealevents.com. Okay.